The very best businesses are the ones that earn a high rate of return on tangible assets and grow. But even ones that don't grow, if they earn a high return on tangible assets, and then of course if you don't pay too much, they can be a good investment. They're a good business to start with by the high returns. If you pay too much for them, you can turn a good business into a bad investment. But if you pay an appropriate price, you can do all right. Now the big mistake which we made in the early years was to try and buy a bad business at a really cheap price, and it took me about 20 or 30 years to figure out that wasn't a good idea. But this is the car business, the car dealership business, if run well, can be a very good business. You have no receivables to speak of. You floor plan your inventory. You can lease your real estate. We don't do that. We'll own 95% of our real estate. So you can have very little capital actually invested in the business. And you do a large volume. Van Tile, which we bought, has 78 dealerships. They'll average over $100 million a dealership. So you can work on fairly narrow margins and still earn a high return on capital if you don't tie up much capital into a $100 million business. If you buy good businesses at reasonable prices and hold them, you're going to make a lot of money. And that's true of stocks as a group. It's true of individual companies. Population is probably going to grow at a little less than 1% a year. So if you have 2% real gains, that means in a generation, in 20 years, you will have greater than a 20% per capita gain in real GDP. Now, real GDP is about $54,000 per person in the United States. If you get a 20% real gain per capita, that's $10,000 per person more per capita income in the United States in one generation. It's fantastic. I mean, it may not be as good as we did in some of the decades after World War II, but if you go back in history, centuries went by without getting anything like that. And 20% gain, how would you like to have that distributed somehow evenly across the population? You'd be rid of all poverty and everything else. So even at our present rates of gain, this country is turning out more and more stuff per capita year by year, and it will continue to do so. We have a marvelous machine, and it has worked extraordinarily since 1776. In my lifetime, I was born in 1930. In my lifetime, the real GDP per capita in the United States has increased 6 for 1 person's lifetime. You know, amazing. I mean, nothing like it's ever happened, and it isn't because we're smarter, and it isn't because we work harder. It's because we have a system that unleashes human potential, and you know. And you listen to the prophets of doom and gloom around you, and you'll get that constantly throughout your life. And instead, you use the $10,000 to buy gold. Now, for your $10,000, you would have been able to buy about 300 ounces of gold. And while the businesses were reinvesting in more plants and new inventions came along, you would go down every year and look in your safe deposit box, and you'd have your 300 ounces of gold, and you could look at it, and you could fondle it, and you could, I mean, whatever you wanted to do with it. But it didn't produce anything. It was never going to produce anything. And what would you have today? You would have 300 ounces of gold, just like you had in March of 1942. And it would be worth approximately $400,000. So if you decided to go with a non-productive asset, gold, instead of a productive asset, which actually was earning more money and reinvesting and paying dividends and maybe purchasing stock, whatever it might be, you would now have over 100 times the value of what you would have had with a non-productive asset. In other words, for every dollar you have made in American business, you'd have less than a penny of gain by buying in the store of value, which people tell you to run to every time you get scared by the headlines or something of the sort. It's just remarkable. If you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age, I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that they give testimonial dinners to and name schools after and everything. Nobody loves them, you know. Their own kids would say, he's in the attic, you know. They never came. By far the best investment you can make is in yourself. I mean, for example, communication skills. I tell those students that come, they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you can't communicate, somebody says, you know, it's like winking at a girl in the dark. Nothing happens, you know, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself. If you invest in yourself, nobody can take it away from you. I'm associated with people that are better than you are. I mean, basically, you'll go in the direction of the people that you associate with, and you want to have the right heroes. You want people, if you want to emulate somebody, you better pick very carefully who you want to emulate, and you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow, and you know, the cost of moving around. Now you get something handed to you, liquidity, you know, which is instant. You can sell, and the cost of doing it are pennies, you know, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
I mean, we look for three things when we hire people. We look for intelligence, we look for initiative or energy, and we look for integrity. And if they don't have the latter, the first two will kill you. Because if you're going to get somebody without integrity, you want them lazy and dumb. I mean, you don't want them smart and energetic. So the answer is that investors behave in very human ways, which is they get very excited during bull markets, and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, you know, or the neighbor says, you know, I wasn't in last year when that neighbor who was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say, this is a lousy place to be. So they don't care what's going on in the underlying business. And it's astounding, but that makes for huge opportunity, just huge opportunity. I have an old-fashioned belief that I should expect to make money in things that I understand. And when I say understand, I don't mean understand, you know, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now. I know, in general, what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. It isn't going to change which gum they chew. You know, if you own the chewing gum market in a big way, and you've got Double Mint and Spearmint and Juicy Fruit, those brands will be there 10 years from now. So I can't pinpoint exactly what the numbers are going to look like on Wrigley, but I'm not going to be way off if I try to look forward on something like that. That evaluating that company is within what I call my circle of competence. I understand what they do, I understand the economics of it, I understand the competitive aspects of the business. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come, because you're not going to get 500 great opportunities.
People are going to get a lot out of advanced education, and some people are going to get very little. And I don't even think it's important that every person go to college at all. I mean, we have all kinds of jobs at 70 or so thousand a year, 80,000 a year, that college training is not of use. And I actually was not keen on going to college myself. Yeah, my dad kind of jollied me into it. He could get me to do anything, but if they'd had an SAT test in those days, he would have taken the test for me. but because I knew I could have a good time, and I liked investing, and I didn't really feel I could read the books. So I don't it's a big commitment to take 4 years, and the cost involved, and maybe the loans involved and everything. And I think depending on what your interests are in life, I don't think it's for everybody. I think it's for a lot of people. But there ought to be a reason you're going. And I didn't really see much reason.